What's up? What's up? What's up? Happy Friday. Happy Friday. I'm getting used to, I don't really do Ask the Trader on Facebook. All right. So I'm trying to get used to the angles and the light is in my eyes. That's why I have on the shades. Just waiting for a couple of more people to join. All right. All right. All right. All right. So this is Ask the Trader. So the format of Ask the Trader is I'm a full-time day trader and investor. I'm known by everybody as what would Joel do? All right. So the format of Ask the Trader is I want you to ask a question in the comment section, and I'll try to answer that question to the best of my abilities. All right. So I am a full-time day trader. I've been doing this for over a decade. I'm an expert in stocks, options, futures, and cryptocurrency. I have a room called the Insider Trading Room. You can also find me at What Would Joe Do. If you haven't downloaded my app, please download my free app. It's called WWJD. What Would Joe Do? And like I said before, the format of Ask the Traders, I want you guys to ask questions in the comment section, and I'll try to answer those questions to the best of my abilities. I want to make sure that everybody knows that all the opinions that we talk about today are my opinion. So I want you to do your due diligence. All right, if I talk about a stock, I don't want you to just go out there and buy it. If I talk about the way of doing something, I don't want you to just go out and do it. I want you to do your due diligence, educate yourself so that you can make the correct decision. So, as a trader, I've been trading for the last decade, and one of the things that I tell a lot of people is that investing is mad easy, right? And when I come in contact with people all the time, they say that they come to me with so many freaking excuses, right? They say, "Oh, Joel, you've been educated, so you can make money in the market," or Joel, you came from a stable family, so it's easier for you to invest in the market, or Joel, you're married, so by having an income that's coming in, it's so easy to invest in the market, right? Then they say, "Oh, Joel, you went to Howard University, so it's easy for you to invest in the market because we know that you're smart." All right, that's for my HU fam that's out there. All right, but you guys got to cut out the excuses. Cut the excuses out. Investing is easy. And, a lot of traders, a lot of other people will come out and say, no, it's not. It's not easy. You need to let somebody that's been in the market for years handle your money because you're not going to be able to do it on your own because so many people don't perform better than certain indexes. And I'm like, yada, 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 right? We all looked at Apple. We all seen Apple grow over 1,000%, Amazon grow over 1,000% in the last, 20 years. We've seen Microsoft make people millions of dollars. We've seen Amazon do it. We've seen Tesla do it. We've seen Google do it. We've seen Facebook do it. We've seen every single solitary thing that you use on an everyday basis. We've seen people make money in. So, what I would like for you guys to do right now is if you don't believe investing is easy, what I want you to do right now is I want you to write down 10 companies right now. Just write down 10 companies, the first 10 companies that come to mind. Now, some of those companies might not be publicly traded, but I promise you, 100% of the companies that you write down, if you go back and you see what the share price is today, and you go back 10 years, you're going to see that the prices are higher. All right. I do this trick every single time I do a consultation. And that's when the light bulb goes off and they say, well, hold up, Joe. If every single solitary company I use every day, I named them and they all went up in value over the last 10 years, why did I lose money in the market? Right? Well, most of the time it's because you've only been trading for 1 week, right? A lot of you guys get into trade for 1 week, stock goes down in value, and then that's the end of your trading career. Time, right? The market is rigged to go up. And I say this all the time. The market is rigged to go higher. What do I mean by that? The market is rigged to go higher. The reason why a lot of these traders that you guys see on YouTube that try to scare you guys into not thinking that you can do it on your own, The reason why I believe a lot of them say these types of things, in my opinion, is because they're not invested in the market, right? A lot of these traders are not investors. So a trader is not going to look at the market the way an investor looks at the market. And because I'm a trader and an investor and I do it all the time, I know what to look for. And a lot of you guys don't know what to look for. And that's why it seems so hard to you. My background was real estate. Everybody knows that. I want you to ask yourself a question right now. In 10 years, what's the probability of the college that you want to send your kid to? What's the probability that tuition is going to be higher in 10 years? It's almost 100%. You guys are going to say, of course, tuition is going to go up in price. Okay. Let's take eggs, for example, or let's go to McDonald's. If you go to McDonald's right now, you order a number one. What are the chances that in 10 or 15 years, that same number one is going to cost the same amount to eat it? Chances are it's not going to happen. I ask people this all the time. If you see a house right now on the corner, what are the chances of that house being higher in price in the next 10 to 20 years? Almost unanimously, you guys will say, oh, of course, it's real estate. It's going to go up in value. I say to people all the time, all right, that Honda Accord that you just bought, it's 2020 right now. What are the odds that the 2030 Honda Accords are going to cost the same amount as the 2020 Honda Accords? Unanimously, you guys will say the cars are going to go up in value, Joel. These are no-brainers. Well, if these are all no-brainers, why the heck don't you believe that the stock or the companies that you use every single day is not going to be higher also? I'm going to tell you guys why. It's a psychology behind it. See, when you go and you buy a car, or if you go and you buy a house, you can buy a house right now. You can buy it for $400,000. And we can go through an up and down market. And if I ask you every single day, how much is your house worth? 100% of the time, I've never heard somebody tell me that their house was worth less than the price that they bought it for. If you went and you bought a car right now and you drove it off the lot, everybody knows that when you drive a car off the lot, you lose 10 or 20% of its value the minute you leave the lot. But if I ask you how much that car is worth, you're going to tell me the price that you paid for it. Actually, you're going to tell me the MSRP. You're not even going to tell me that you got upgrades and that you had to pay tag and title on it and gap insurance. You're not going to give me those numbers. You're going to give me the MSRP. It's because we lie to ourselves. See, when you buy something, that value always is that value that you bought it. See, the stock market is real. The stock market is a real thing, and that's why a lot of you guys can't deal with it, because you're so used to lying to yourself about everything in life, about why you can't invest in the market, or why it's hard, and why it's this, that, and the other, that you can't accept reality. The stock market is one of the most realistic things that you're ever going to come in contact with in your life. And a lot of you guys can't stand it. You can't stand buying something and seeing the value go down, right? But that's what everything around you is doing. When you bought your house for $400,000, you know, if interest rates had gone up in value, your house probably lost 10 or 20% of its value. And because there's no ticker that tells you how much it is, because a lot of you guys go on Zillow right now, and you're like, oh no, this value is not real. I paid more than that. My house is more than that. And then when somebody comes to buy it and they don't buy it for that price, you know, it's a reality check for you. Well, the stock market is not about that BS. It's not going to allow you to lie to yourself. It's going to tell you what the value is at that moment at all times, and it's going to fluctuate in price. That's why a lot of you guys can't deal with it. Another reason why you guys don't make money in the stock market is because you don't even know how to read a chart. I teach reading charts to 5th graders. If I told you, all right, if you're willing to buy Apple right now, how much was Apple last year? Most of you guys can't answer the question and don't even know where to go to find the information. That's why you believe the stock market should be left to the professionals. But the fifth graders will say, hey, mom, all you got to do is pull up Yahoo Finance and look at the 1 year or the 5 year chart. I can do it in 20 seconds. Now, you grown adults that's throwing hundreds of thousands of dollars, millions of dollars into the stock market every single day. Most of y'all can't even tell me a year ago how much that asset was worth. But when it comes to real estate, when it comes to buying cars, when it comes to education, when it comes to buying clothes, when it comes to buying groceries, when it comes to buying TVs, when it comes to buying anything in life, y'all will come with a whole stat sheet about the value of it. The reason why it's hard for you is because y'all don't know what to look for. Y'all make it hard and y'all make it easy for a guy like me to make money in the market. The stock market is rigged to go up. Y'all just don't know what to look for. Anybody that tells you that the stock market is hard ain't invested in the market. I ain't never heard a person that was invested in the stock market for the last 10 years say it was hard. They're going to all say that was the easiest money I ever made in my whole entire life. Why? Because there's a couple of things that's going on. A, the cost of everything is going to be higher in the future. That means the businesses that are around you are going to be higher in the future. B, y'all don't understand inflation and when governments print money. Y'all don't even realize that when the government said we're printing $3.5 trillion, almost $5 trillion for this infrastructure bill, a bunch of y'all think that all that money is going into infrastructure. A lot of that money is going to find its way into the stock market because you got to build these businesses that's going to build the infrastructure. I don't understand why a lot of you guys don't understand that the stock market is the building blocks of all business. A lot of you guys don't get that. The stock market is just going to go away. Well, if the stock market goes away, that means everything around you is going to go away. Everything. The Krogers, the Walgreens, the Nikes, everything that you do as a consumer is a business that's on the stock market. And a lot of you guys have not figured out that concept yet. And when you hear governments talk about printing money and that money flowing into the economy, and when you're in the United States and you have the #1 economy in the world, you got other countries investing in the United States, into the Amazons, into the Googles, into the Facebooks, so that they can make money on the market as well. For some odd reason, y'all ain't figured it out yet that the market is not only rigged to go up, it's the easiest money you're going to make in your whole entire life. And no, it's not going to go up the next day or the next 2 days or 3 days. Sometimes it happens. Shoot, in the last month, if you bought Solana, you'll be up 300%. If you bought Apple in the last 30 days, I think you're up 10 or 20%. Your real estate ain't going up that fast. Now, I'm not telling people to not invest in the real estate market. I'm saying you should be invested in everything that's easy to make money off of. Everybody knows real estate's going to go up in value, so put a lot of your assets in it. Go live in a house. 20, 30 years from now, you're going to be able to cash out. The stock market ain't nothing but little pieces of real estate that you can afford. You might not be able to afford a $400,000 house, but I can afford a $400 stock, right? And I hear this all the time. Well, I'm just going to wait until I get a whole bunch of money, Joel, and then I'm going to invest in the stock market. That makes no sense whatsoever. You're going to wait to make money to put it into the stock market that's supposed to make you money. That makes no sense. That's just an excuse to yourself to not be involved in the market. All right? 10 years ago, 12 years ago, actually, I keep saying 10 years ago. I've been invested in the market for, 2007, right? So that's 14 years? Nobody taught me anything. I came into the market, there was no Facebook around, there were no groups, there was no trader that I can go and talk to that can explain to me the stock market. I had to learn by trial and error. And luckily, I was invested in the market and I taught myself. So by me being self-taught, I always tell people that I think I have an edge on everyone because I didn't have to go through the financial education that they try to teach you what the market is based off of. I based everything off of reality, right? I also looked and I saw, I learned very quickly that stock price has absolutely nothing, like a lot of you guys are trading by looking at stock price. That's the most rookie thing that you can do in life. You don't approach a stock by looking at its stock price. That's what I say non-educated individuals do. You want to find companies that can grow in value. You make your money from the stock price going up. Yes, you do. But that number is attached to something, and that's called its market capitalization. And I try to teach you guys day one about that. I teach all my fifth graders so that they don't grow up being uneducated and ignorant like their parents, right? And look, I was ignorant too. I know I keep throwing everybody in the same bag. I didn't learn about the stock market until I was in my 30s, right? But if I had been invested in it when I was in my teens, I would be a gazillionaire right now, okay? Not because I would have known to buy these secret companies that nobody knows about. Nah, it was because if I had been invested in the market and the market has gone up 10 or 20 or 1,000 times its value, then whatever amount of money that I put in at that time will also be worth that amount of money. Investing is mad easy. You guys make it extremely hard. All right, so what you guys need to do is you got to go. Look, I don't even want you to take my education. All right, I'm doing webinar week next week. Webinar week is my way of giving back to the community. I'm like, look, man, I'm tired of seeing y'all lose money. I'm tired of seeing you guys approach the market the wrong way. I'm watching all these YouTube videos, people telling y'all these complicated ways to invest in the market. And I'm like, yo, just go buy some Apple. Like what is this person talking about and this person talking about? You start off with the things that you use on an everyday basis. But what you guys got to learn is you got to realistically know how much those things can go up in value. See, everybody and their mama that's invested knows that Apple averages about 20% a year. So if I put $100,000 in Apple, I can expect it to be worth about $120,000 maybe in the next 365 days if I buy it at the right levels. Some of you guys aren't doing that. You're not vetting the investment that you're making. You don't know how big that investment is because you think the investment is how much money you put into it, right? But you got to know how big that company is and how much it can grow in the next 5, 10, 15, 20 years. And if it's an adult already or if it's a small kid that's trying to grow in value. I teach all of this during webinar week, the very first day called Stock Party. I teach you guys the fundamental basics that you need, and then you can go and learn all of those exotic ways of trading, but you guys don't even know the principles of money. And it's amazing to me because I was the same way. So when I say I'm amazed and I talk about you guys, I was the same way, and I had to teach myself this information. Because I was losing money in the beginning and I didn't understand why I was losing money and why these no-brainer companies were making me more money than these little penny stocks that I'm over here trying to buy, right? And then I started to learn, it has nothing to do with the stock price. It has everything to do with the market cap. If you guys are going out and buying cryptocurrency right now, you need to know why you're buying, not why you're buying it, because y'all spend so much time learning what the project does. When, before you even look at the project, you need to say, how big is it? Nobody in the insider trading room does that. When you talk about a company, I don't want to hear what the project is. I don't want to hear what the share price is. Tell me how big the company is, because that's the only thing that matters to an investor. If y'all came to me when Solana was $1 billion, I probably would have invested in it because you guys come into the room and you guys give me projects all the time. I see 10 projects a day. Okay, everybody's trying to change the world. It's like Shark Tank. Everybody has a great idea. Where's the money going to flow into? Who's valued the best? If y'all had come to me and said Dogecoin is $1 billion, and then I look up and I see, Ethereum is 40 billion and Bitcoin is 100 billion. I have a comp. In real estate, we call those comps. I can compare it to something and I know what value it can go to, not by looking at the share price, looking at the value. It's a $1 billion company that can go to 100 billion. That means I can make 100 times my money. If I put $100 in, it can be worth $10,000. Okay, now I'm interested in the project. What do they do? But a lot of you guys are getting into projects that are already too big. They're like $100 billion. If you're jumping into Solana now, I get it. But you missed out on it when it was $1 billion and it went to 40 billion. You missed out on 40 times your money. 40 in 30 days, right? So you guys need to start educating yourself on investing in the market. Another reason why you guys are missing out and you're not making this easy is because you don't understand that you and we don't move the market. All right. Most people in the United States that are working, in the United States has set up our economy the perfect way, right? So if you're working for a company is able to write off certain things if they allow their employees to have a 401k, right? And then they'll match the 401k, and then that money is rotated back into the system. So it's brilliant because the United States allows a business to run, and by allowing that business to run in America, they say, all right, a percentage of whatever you make, you have to reinvest those funds back into all of the major companies in America. A lot of you guys don't understand that yet. Y'all think that for some odd reason, the mutual funds and the pension funds are going to take all the money out of the market and then just leave it in a savings account somewhere, earning no money. That's not how they make money. They're in the business to take your money and reinvest it back into the economy. And the government tells them, yo, you need to reinvest back into this economy because if these companies inflate in value, it's going to attract other countries to invest in our economy. It's like a pyramid scheme. See, if I say pyramid scheme, you guys understand. Y'all like, ooh, I know that. I know pyramid schemes. It's the same thing, right? And when you see it on a higher level, a legitimate level, you start to understand, oh, okay, they're just going to keep printing money. It don't matter if companies lose money. Once a company becomes part of the staple in our community, y'all heard this before, too big to fail. I know y'all didn't really truly understand what that means. This company is too big to fail. These banks are too big to fail. They're protected. They can do whatever they want to. The government's going to print money and then reinvest it in that company because they know that if the banks shrivel up, if the car companies shrivel up, then the economy can't keep flowing. And if the economy can't keep flowing, we can't attract other countries that are having financial issues that want to invest in our economy. So when they go and they print $3.5 trillion, they are artificially inflating the market. And y'all don't see that yet. Y'all don't see it because you're too busy thinking to yourself, I'm going to lose all my money putting it in Apple. Word? Apple? I'm going to lose all my money putting into Walmart. Walmart? Target? You serious right now? Are you serious right now? That's how y'all talk. But it's just so hard, Joel. I put my money in something and it immediately goes down. When all of us put money into something, it goes down in value. You've been in it for a week. Come to me after a year or come to me after 5 years and then tell me you've been losing on a project. Okay? Investing is easy. Y'all make it hard because you don't know what to look for. You don't know what to listen for. Another reason why a lot of you guys lose money, and I'm going to get to your questions because I don't see them in the comments yet. Another reason why you guys lose money in the market, hold on, is because you're over leveraged. You got a $100,000 account, you're going to put it all in Amazon. So when Amazon drops 20% and your account's down 20%, you're tripping. You got to diversify your funds, right? You got to diversify. I did the same thing in real estate. When I was in the real estate market, I put everything that I had into real estate because everybody told me that it was the safest option on the planet. Don't worry, Joel. As long as real estate is around, you're going to be great. You don't have to invest in any other assets other than real estate. And I truly believe that. And I know I'm telling you guys to do the same with the stock market, but I don't truly say that, right? If you've taken any of my webinars, you're going to hear me tell you that you should be invested in everything. You should have a 401k or an IRA. You should have real estate. You should have a stock portfolio, right? You should have health insurance, life insurance. You should have wills in place, right? You should have all the foundational pieces that you need that makes people great in America or great business people. You need to have that foundation in place, right? So that when one is struggling, the other, everything else is doing okay. All right. You got $100,000 account. I tell people when you first start investing, first off, you should have no more than 10% of your account in any given asset. That means if I have a $100,000 account, I can't put more than $10,000 into a company. And people ask me all the time, why, Joel? Because if I'm looking for, look, these are just numbers. Let's say I got $100,000. I put 10,000 in Walmart, 10,000 in Apple, 10,000 in Google, 10,000 in Zoom, 10,000 in Nvidia, 10,000 in Wingstop, 10,000 in Shake Shack, right? And let's say one of those companies go bust. Let's say one of them goes to zero, which is funny to me too. A lot of you guys don't invest in the market because you swear the stock you got is going to go to zero. And I ask people all the time, name a stock that went to zero. Name one. Name one stock that went to zero. Can't do it. You can't do it, right? So, let's say one of those companies goes to zero. Then that means you still got $90,000. But let's say one of those companies earned 10 times its value. Same thing that happened to me in Bitcoin. I put 5,000 in Bitcoin. Bitcoin went from 5,000, I think it's $50,000 today. Well, imagine if you had 10,000 in something and it ended up making 10 times its value. That means that one of your investments is going to cover your whole initial investment. And a lot of you guys don't think that way. You're like, hold up. If I pick 10 companies, all I need is one company to grow 10 times its value, and it's going to cover my initial investment, which was $100,000. I just need one. That means 9 companies can go to zero. One company can go from 10 to 100,000, and I'm still in the same place that I started. But here's the thing, guys. Most of the time, none of your companies is going to grow 10 times its value. And you won't ever have to experience that problem. And a lot of you guys don't look at it that way. You're either all or nothing. You're either I want to put it all in one time and then I just want to wait 20 years from now and let it do what it do. And then it's been 20 days, it's down in value, and then you want to go out there and sell it. All right? So what I want you guys to do, what I want you guys to start doing is stop coming in the room and asking the wrong questions. If we talk about a stock, what's its market cap? What can it grow to? What is it similar to? So if you guys start talking about a project, I'm going to say, what is this project similar to? And what's the value of that project? Because that's going to make people say, oh, I want to buy this project. Everybody would have bought Solana. And look, I'm mad at all the Solana people in the room because y'all knew about the crypto and didn't tell nobody about it. If anybody had just told me Solana is the fastest moving crypto, like as far as processing, as far as you putting money into something and sending it, it can process faster than Visa and MasterCard and all these other banking systems. And it was only $1 billion and it was similar to Ethereum. I would have gone all in on that company because I would have said, A, it's the fastest. Then I would have said, B, it's only $1 billion in size. And Ethereum is, 100 billion. I think it's 100 billion in size. I don't know. I got to go check. I had something that it was similar to. I saw what it does. And because I see it moving and I see people investing in it, I see where it can go to. That's how you guys should be analyzing stock or analyzing investments that you want to get in. If you want to get into something, how big is it? If you see how big is it, what is it similar to? Once you find out what it's similar to, then you can figure out what it can grow to. It's just like if I was doing real estate, I can't come from New York and come to Atlanta and see a condo in the city and just be like, oh, it's worth $10 million. Why? Because there's no comps that can support that condo for $10 million. I know you came from New York and $10 million apartments is normal. That ain't normal in Atlanta. So when you come to Atlanta and you see a 2-bedroom condo, you got to say, all right, what's the most expensive 2-bedroom condo in the area that this is similar to? If that number is $500,000, then that's the maximum you're going to get. And if you see it for 150 or 200,000, now you know what it can grow to. Y'all don't do that when you guys invest. I did that just that fast. That's why I'm a one percenter. That's why everything I invest in, I almost always make money on it. Because A, I have a time frame set. B, I know why people are buying it. And C, I know what it can go to. And then when it gets to that value, then I have to decide if I want to hold on to it or not. All right, a bunch of you guys are buying Apple right now. It's a $2 trillion company. Y'all didn't even know that it was $2 trillion. So what's the next number that everybody's looking at? You don't even know. The number is $3 trillion. Now, if Apple's $2 trillion right now, and they think it can get to about $3 trillion, you got to go back and say how, $2 trillion to $3 trillion means it's going to earn what, a 50% return? You got to ask yourself, how long did it take Apple to make a 50% return the last time it earned 50%? If that was a year to 2 years, then that's how long it's going to take for you to make 50%. A lot of you guys don't look at the market that way. I break down the market by going backwards. And that's why trading and investing is hard for you. It's not because you don't know how to pick stocks. It's A, you can pick all the stocks that are around you. Like when you leave today, what I want you to go do is when you drive up the street, I want you to write down the first 10 companies that you see. It might be AutoZone, it might be Wendy's, it might be McDonald's, it might be Kroger. You write down those companies. Look back 5 years ago. Look back 1 year. Say a year ago, if I had bought these companies and I invested this amount of money, how much would it be worth today? Then you go back 5 years. Well, let me see how, if I had invested in these companies 5 years ago, how much would they be worth today? Let me go back 10 years and see if I had bought those companies 10 years ago, how much would they be worth today? Do the same process, guys, that you guys do with anything. When you go to buy real estate, you're going to check the numbers of real estate in the area, the comps, right? You're going to come out with a stat sheet to kind of figure out what you can make. And that's what's going to make trading a lot easier for you guys. All right, you guys got to listen out for things. If I'm in the room and I say, guys, there's a semiconductor shortage. I've said there's a semiconductor shortage probably for what, 4 months? Some of you guys got it. Some of you guys didn't. Y'all said, what does that mean, Joel? Well, first of all, you need to know what a semiconductor is. Google, what is a semiconductor? Oh, a semiconductor is basically the heart of all electronics. Electronics can't work without a semiconductor. You've heard of Intel, you've heard of AMD, you've heard of NVIDIA. I said there's a semiconductor shortage. I'm buying NVIDIA. I'm going to make a whole bunch of money on it. A lot of you guys ran and bought airlines. I'm like, there's not a shortage of airplanes. There's a shortage of semiconductor companies. Then when I show y'all every single day, who is your stock star? NVIDIA. Who is your stock star? Every other day I'm NVIDIA, 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 NVIDIA. The light bulb just doesn't go off. I make trading easy because I don't try to overthink the market. If the government says they're about to print $3 trillion, I say to myself, oh, I need to be invested in the stock market. I need to be invested in crypto. Y'all don't understand that yet. If you hear there's a gun shortage, y'all remember when I said, guys, there's a gun shortage and an ammo shortage. That means supply and demand. That's business 101, right? If the demand is there and they don't have enough supply, that means the stocks that produce those things are going to go up in value. Okay? I say it all the time in the room. I say, oh, there's a gun shortage. Supply. If you want to invest in gun stocks, ammo, invest. You're going to make money. Well, Joe, why haven't you? Because I'm so invested in so many other no-brainer trades. I don't have to worry about that one that I'm giving you guys. All right? So I give out gems all the time. You guys got to learn how to take that information, process it, then find the companies that you can invest in. And if it goes down in value for the first 10 or 15 days, it doesn't mean that it's a bad trade. It just means that you're lucky enough to get in before the masses know about it. Because we're getting information before anybody. And I think that's where a lot of you guys go wrong. See, you guys are dealing with people that are professionals, that understand the market, that knows how to get in front of everything. So you're not used to that. You're used to being late on everything. So when you buy something and it's going down in value, you're kind of feeling like, oh, I'm late again. We have hardly been late on hardly anything. We were there in 2017, 2016 for Bitcoin. We were there for Tesla. We were there for space. We were there for Amazon. We were there for every single company that you guys are talking about. We've been talking about them way before they go bananas. All right, you guys got to learn how to process that information and not feel like you're getting it at the highs. You got to take that information and say, how much can these companies grow if there's a demand for it? Now, the only space that people are struggling with right now is the cannabis sector. I'm telling y'all straight up right now that the cannabis sector, probably in about 3 to 4 years, is going to be like what crypto is doing right now. But the reason why you guys are not buying it is because you saw it go up in value, it went down in value, and now you just believe ain't nobody using cannabis no more. America has become the #1 consumer and the #1 provider of all the paraphernalia for cannabis. And all they doing is positioning themselves for this market to explode in value once everybody makes their money off of crypto and the regular stock market, because that's how people and big money operate. They make their money in certain sectors, and they got a list. They got a list of all the sectors in the in the world. They say, all right, we got the e-commerce companies like Amazon's. We got the payment space. We got electric cars. We have cannabis. We have crypto. We have oil. We have the oil and commodities industry. We have what's it called? I want to say not trucking, but we got I don't know what they call it. But you got transports. You got all of these different, you got all of these different indexes, these different sectors, and all money does is it rotates from one to the other. When they make their money off of Apple and Amazon's and Google's, when Apple hits its $1 trillion, they're going to take a piece of that and they're going to say, all right, we want to make a high return off of this. So where do we go to? We go to the struggling sectors, because we need these sectors to grow because they're still part of America. All right. I know we taking care of the stars, but now we got to take care of the people that are struggling. Then you'll see money flow into those different sectors and then they'll go up in value. But the only way you're going to be able to capitalize on it is you can't just be in one sector. You can't just be all cannabis. You can't just be all electric cars. You can't just be all e-commerce companies. You can't just be all cryptocurrency. You got to have a piece of all of it. And then when you're in situations like now, when everything is going up in value, you got cats like me that's coming in the room like, I can't lose because every single thing I'm picking is going up in value. Okay? And I want you guys to be the same way. So let me see if I can get some questions. I guess y'all just like to hear me rant. I'm trying to answer some of your questions. Let's see if I have some here. All right. Fear is hard, not the stock market. Exactly. You guys are afraid. That's why you can't make money. I try to take the fear out of it. How many cats y'all know will come in the room and openly say, I'm buying this today? And if it goes down, y'all can throw as many darts as you want at me. And then you're like, dang, how come this dude ain't getting scrubbed but for like 2 companies? The only 2 companies people are giving me problems with is Canopy Growth, which was the largest cannabis company in the world at one point, and Jumia, the Amazon of Africa. Well, I got a lot of flack about ChargePoint that's making a move right now. Those 3. But then y'all forget about the other 97 companies I made y'all money on. People only remember the stuff that's losing. And that's fine with me. I like to take those darts because I also try to show you guys, even though I'm invested in some of these losers, when you're winning 90% of the time, you're going to lose 10% of the time. Right? So if I have 20 companies, I'm expected to have 2 or 3 of them that aren't performing like they're supposed to. And that's actually a good thing, because you're not supposed to have all your eggs in one basket. You're supposed to have a couple of losers there. So what I usually do with my losers, guys, you guys are going to say, what? This is what you do? This is what I do. Let's say I have 50 companies. I literally write down all the ones that are red. And then When I think the market, like right around now, if I think the market's about to drop about 10, 15, 20%, I'll shed some of my winners. I'll look for some of those losers that are down 50, 60%. And I start sprinkling a little money on the red ones. The easiest way to make a 30% loss go up in value is to invest the same amount of money that you had in it. Because the minute I invest, let's say I have a $5,000 investment and it goes down, and then I invest that same $5,000 in, that 30% is going to change to 15% just like that. And now I just made myself feel better. And then if it grows, it doesn't even have to grow the full 30% in order for you guys to profit. It only has to go up halfway for you to break even. A lot of you guys don't understand dollar cost averaging yet. It's the secret to not. All right, I want to make sure you guys understand this. It's not the secret to making money. It's the secret to investing in companies that you love, right? It's the secret to investing in companies you love. See, I've been invested in Canopy Growth since it was $5 a share, but I didn't have as much money as I needed to get into it. When I finally accumulated all of my funds in it, I was able to get about 1,000 shares. My investment is right around that $17 range. So yeah, when it ran from $17 to 56, yeah, I was up $40,000 on my investment, and of course it reversed and came back to 17. But y'all see how right around the $17 mark it's starting to have some support? It's because one percenters like me have been accumulating it, and our cost basis is way lower than everybody else's. So we can afford to see something drop from 50 to 17, because if it holds that 17 and it gets back to 50, then that means it's going to 100. And now my $17,000 investment hopefully can be worth $100,000 or $170,000 one day. If it doesn't, it doesn't matter, because I have other companies that have made the money back from what I lost from that particular company. But the only way that you can do that is you got to be diversified. All right, so one question came in that said, one thing I struggle is knowing when to sell because I'm a long-term investor, but I know there's a time to sell. Also, taxes play a role when to sell. All right, so a big reason why a lot of you guys are also having a hard time in the stock market is because you guys only see it one way. All right. When you come to webinar week, I'm going to teach you guys how to look at the market in 3 ways. See, you're not supposed to come into the market and only be thinking long term. You should be thinking short term, medium term, and long term. Short, medium, and long. Your short term accounts should have their own separate accounts. Your medium term account should have its own separate account. Your long-term accounts should have its own separate account. The problem is that a lot of you guys are doing everything in one account. You guys are investing, trading in one account because you're trying to consolidate it and make it simple, and that's why it's hard for you guys to make decisions. Let the short-term account do what it's supposed to do. Let the medium-term account do what it's supposed to do. Let the long-term account do what it's supposed to do. And then there won't be a question of when you're selling something. Because a lot of us sell things when we see red or we see something winning, so we want the red to go away, and we're getting in and out of something, and something that we wanted to hold long-term ended up becoming a trade. Well, you got to say to yourself, when you buy something, you got to say to yourself, am I about to hold this for a year to 2 years? And if I'm about to hold it for a year to 2 years, when it drops in value, I'm not going to sell it. If it's a long-term investment and you see something drop in value, you're supposed to buy more, not sell it. That's how I know if you're investing or trading. Trading, yeah, you might want to get out of something, but when you bought that particular asset and you decided to trade it, did you say to yourself, how long am I going to be in this trade? I want you guys to approach trading like flipping a house. I want you guys to treat investing like owning a house. Flipping stock, trading. Owning a house, investing. A lot of you guys will buy a house at the highest price and not care because it's the house that you love and you know you're going to be in it for 20 to 30 years. You can't approach the market like that when you're flipping a house. When you're flipping a house, a lot of factors come into play. School's about to start. I got to get in, I got to get out of this house, I got to renovate it, and I got to put it on the market before school starts, because everybody that does real estate knows the time frame, right? People start looking at houses right after the Super Bowl, right in February, and they start looking at the market because they want to try to buy homes, to be in those homes, maybe during the summertime, and they want to do all of this before school starts because they got to pick the district that they want their families to live in. Every real estate agent knows this process. You can't do that when you're flipping a house, right? When you're flipping a house, you can't say, oh, I'm going to hold this for 12 months, because then you miss your window of being able to sell it. All right, so you guys got to understand what you're doing. If you're having issues of knowing when to sell, it's because you didn't have a plan before you bought that stock. Your plan was to make money. I don't know how much I'm going to make, and however I feel about it is when I get out. If I feel like it's too high, I'm going to sell it. That's the most rookie way that you can approach the market. When you buy a stock from now on, the question that you say to yourself is, how big is it? It's $1 billion. Okay, when are you going to sell it? And don't tell me the share price. I'm going to sell this company when it gets to $5 billion in market cap. Why? Because the company that is similar to is worth that amount of money, and they're not producing the same products like this company is doing. That makes way more sense than I bought this one because it was 0.001 and I was able to buy 1 million shares. And when it gets to $1, that means I'm going to be a millionaire. That's how a lot of you rookies approach the market. And then you wonder why it never hits $1. Because in order for that company to hit $1, you don't realize that the market cap is attached to that company. And in order for it to hit $1, that means it's going to be worth more than every single company on this planet put together. And a lot of you guys don't even know this. And I'll be sitting there looking at y'all like, are you serious right now? You seriously think this is about the... And I see the Reddit rooms talking about it. I'm like, guys, am I the only sane person? Is this the Twilight Zone? It's no way this company is about to get to $1 because it's going to be worth 100 trillion. I'm like, the largest company on the planet right now is 2 trillion. You telling me this company that nobody knows about is going to be worth 100 trillion by December? And a lot of you guys are like, yup, because Reddit said it. And I just shake my head. And I look at y'all silly, and then y'all get mad at me when I talk in a condescending way because you sound like an idiot right now. And you don't even realize it because you're not educated on the market. You never learned the fundamentals of basic value. Like, it's just basic value. It's like somebody saying, buy this Honda Accord today for $30,000 because you're going to be able to sell it at the end of the year for $3 million. And then y'all are going out there buying the $30,000 Honda Accord, trying to sell it for $3 million in December, or thinking that it's going to be worth $3 million. That's not realistic. Maybe you can sell that Honda Accord for 35, maybe 40 because of the demand. But for $3 million? And that's the number y'all guys are focused on. That's right, $3 million. And I'm like, where you get this number for? Because somebody's willing to pay that. No, they're not. It's attached to a value. How do y'all not know this? I know I didn't know it either. And when I finally figured it out, I was like, oh my God, I can't believe I've been investing this way and didn't even understand the fundamental basics of business. And that's where a lot of you guys are. Okay. All right. How many years did it take for you to get profitable? 2. First year, lost everything. Because I thought like y'all did. I thought I could just get into the market. I've been winning my whole life. I've been winning in real estate. I was a millionaire on paper before everything was taken away from me. And I'm like, oh, if I was a millionaire on paper in real estate, I could be a millionaire on paper in the stock market. This is easy. And I lost everything first year. Then I re-upped. I said, oh, it was a fluke. Everybody has their downfalls. And then I lost everything again. And then I started to learn. I started to watch CNBC. I know y'all hate Cramer. I started to watch Cramer. All the things that we're talking about right now, Cramer teaches this on TV. And it's amazing to me to hear a lot of you haters hate on Cramer. And I'm like, y'all obviously don't watch the show. Y'all hate Kramer because he's on TV and he's made money. And yes, in the past, he used to be evil, and he was one of the hedge fund managers that manipulated the market. But guess what, guys? It's like that preacher. I love preachers that used to used to be pimps, used to have, used to do everything. The drug dealing pimp, thieving, pastor is always the pastor that I listen to, because I'm like, dang, you went from the dark side and you got light, and you can explain to people how it was in hell and what gave you the energy to do good again. And that's what Kramer is doing. Kramer came out and said, look, I know I came from evil and I became a successful individual by doing that. But I'm going to teach you guys the market and what hedge funds are thinking when they're buying stuff. And if you learn how to think like the billionaires and not the thousandaires in the room, investing becomes easy. A lot of you thousandaires in the room, shame on y'all. Y'all don't have it, like a lot of people in the room don't even have $500 invested in the market, but they want to tell everybody how to invest their money. Oh, don't buy that project and buy this project and that project. And they haven't been invested in the market. Talk to investors that's invested, that's made money, right? And then when I call people out on it, y'all get mad at me. And I'm like, no, this is because y'all shouldn't be listening to people that ain't made no money in the market. Just like I just don't do it anymore, because you're getting led astray. You're going in a circle, and you're learning the wrong information, and you're going in a complete circle, and you're going to be in the same place later. Because a lot of people think because they go and read a book or they watched a couple of YouTube videos that they can educate the market, and they can't. They can, but unless you got money and chips in the game, I can't respect you or respect your hustle. I just can't. So I like to listen to the billionaires talk. I love Kramer because Kramer averaged 30% a year for like 20 years. He outperformed the S&P 500, dang near outperformed the NASDAQ, but y'all want to hate on him? You're hating on him because of what he represents, a white man on TV that gamed the system. But instead of learning what he's doing, because he has CEOs, like the CEO of Solano was on CNBC. But you hate Kramer so much, you could have made a fortune just by watching that episode and listening to that CEO talk about his project and what its value can be in the future. You hating so much. He made all this money, and I bought a stock one time that he said was going to do well, and then I lost money, so I don't like him no more. You don't like him because you bought a stock at a high, didn't sit in it for 12 months, and now he's the devil. No, you're the problem. And a lot of you guys don't know how to face yourself and look yourself in the mirror and say, I'm the issue. Y'all see how I just lost 3 people just off of that? they can't take it. People cannot take being wrong or being the problem. You guys got to be able to accept that you are the problem. You're the one that's not educated. You're the one that doesn't understand the fundamental basics of the market. You choose to not take a $25 or a $50 class where I teach you the stuff because you feel like you can do it on your own. And then you later go and pay somebody $4,000 or $5,000 to teach you something, and they ain't even invested in the market. I hear these stories all the time, right? I keep my products as low as they can so that everybody can have a chance. All right, look, guys, I made $35,000 in crypto in the last 30 days. I don't have to do classes. They don't make $35,000. I make some good money doing classes, but they don't make $35,000 in a month. I'm trying to get there, but that's not where I earn my income. I earn my money from investing and trading, and I show you guys, all right? I show you guys when I'm invested in, when I'm making this money and I'm making that money. I'm not making that much money doing education. I promise y'all, I could go away and just say, you know what? I just want 10 clients to pay me $25,000. And I can get that. And I can make $250,000 a year, and y'all won't even have to know who I am. But I don't want to do that, right? I want to give. I want to make sure that you guys understand what to look for, because the stock market, there's no competition. We all can make money. We all can be rich. We all can be driving crazy things. And I want you guys to get out of that mindset that by buying things is sin. By buying things for your family, it's just the love of money. Like, y'all be killing me in the room. The love of money, and you shouldn't love. Guys, if you want to live to be 150, you're gonna have to spend some money. Like you're gonna have to eat better than you're eating right now. That means you're gonna have to spend way more money that you're making right now. You might need a cook that you might have to pay $40,000 or $50,000 a year, a chef that can provide the nutrients and be an expert in that field to know how to make the food for you. And you guys don't even think like that. I'll just do it on my own. You didn't take no class on food. You don't know what's going to make you live to be 150. Right? But y'all swear y'all can do it. I'm going to do everything on my own because you're being cheap-minded. Make money, and then you ain't got to worry about all that. Then you can spend all your extra time maybe exercising. Maybe developing that business you wanted to do. But y'all so into doing every single thing on your own, you can't get ahead. And the only way you're going to be able to do that is by making money. And by making money, it's going to allow you the freedom to be able to do the things that you want to do in life. All right. So, all right. Next question. As far as trading, in what way do you prioritize day trading options, swing trading options, or investing? Which one do you focus most of your attention on? Great question. Options, guys, is the same thing as buying stock. So if I was buying stock or if I was buying options, the same exact strategy, the same exact time frame. All right. I prioritize my accounts small, short term, medium term, long term. I got short term options plays that I might want to get in and out the same day. Just like I'm trading stock, I'm going to be in and out of those plays probably within an hour. That's why I have the video called 60-minute trading. If I'm doing medium term investing in the options market, I'm going to look at a different chart. And I'm going to look at, it depends on if I'm going 3 or 6 months out, I'm still going to be using the day chart. But, I'm gonna focus on, like, if I buy an option on at the 200-day moving average. A lot of you guys are buying options at the 200-day moving average, expecting to make money in 2 or 3 days. You're using the wrong charts. You're mixing a swing trading strategy with a longer term frame, a longer time frame. So if I have my accounts that are set up for short-term options, medium-term options, and long-term options. I know I keep saying that you guys should have an account set up for everything, but you got to. I don't care if you guys do all short-term in one account. Like, let's say you're into day trading and you want to day trade stocks, options, futures, and cryptocurrency. You can do it all in one. Well, you can't do crypto, but the stocks, the options, and the futures, you can all do that in one account. You can have a medium-term account where you have maybe 4 or 5 month trades. You can also have 4 or 5 month option plays. You can have a 4 or 5 month investment in, cryptos. But I want you guys to treat everything the same way. And your long-term stuff, guys, is your set it and forget it. If you're investing in something and you know it's going to be longer than a year that you're going to be in that particular investment, you got to buy it when it's on sale. You got to. That's the only way you're going to be able to really, really capitalize on something. Facebook, when it first IPO'd, it was $45 a share. I said to myself, I want to invest in this company so I can make a whole bunch of money in the next 5 to 10 years. It dropped from 45 to 30. Joel bought some. It dropped from 30 to 20. Joel bought some. It dropped from 20 to 17. Joel bought some. I was waiting for it to drop more. It didn't. It dropped from 45 to 17, and then the rest is history, because then it went from 17 to whatever price it is today. I wouldn't have been able to make as much money if I had put all my eggs in one basket at 45, because at 17, I'm buying it for 1/4. Is it 1/4? 1/3 the value of it that I started out buying it. But because now it's lower and I'm using the same amount of money to invest, I can accumulate more shares. So then when it finally started to go up in value and I got 10,000 in it and it grows 10 times its value, that's how you guys make 10x or make a 10,000 investment worth $100,000 one day. How did I know that Facebook can make me 10 times my money? Well, you had to look at other assets that were around that were larger than Facebook at the time. And that gave you a chance. That's why I keep telling everybody, guys, if Facebook is the comp and you see that it's sitting at $1 trillion, this is a no-brainer. If you see that Facebook is $1 trillion, and I go and I look up Snapchat, and I see that Snapchat ain't even well, I don't know how big it is. It's what, 50 or 100 billion? It might be worth 50 billion. Facebook is worth $1 trillion. Snapchat is worth like 1/10 the size of Facebook. It's a no-brainer to invest in Snapchat because Facebook is the comp. It's telling you how big Snapchat can grow. And because Snapchat is the baby cousin, it started out where Facebook used to be. But you guys don't approach the market like that because you don't know what to look for. Investing is easy. Y'all make it hard. I don't. All right. No, I do not mix my long and my short-term accounts. Period. I don't do it. I just don't do it. The next question is, when you're currently invested in stocks or established companies that have been around for 30 years with high market caps, how do you approach selling those types of long-term investments? Very good question. Well, when you decide that 20% or 10% is not enough, Apple, for example, is earning 20% a year. When Apple starts to only earn 10 or 15% a year, that means that its growth is starting to, it's expanding to, its expansion and growth is starting to slow up. That's when I will decide I want to take my money out and put it into something else. But your long-term boring accounts is where your Apples and your Amazons and your Google should be. Guys, Amazon, Microsoft, and Google should be the most conservative stocks that you're in. A lot of you guys, Apple and Microsoft and Google, are like your most advanced stocks or your stocks that have the most beta. If you're young, if you're under 40 years old, there's no reason why Apple, Amazon, and Google is the beta of your account, because that means you're only going to earn 10 to 15% a year. You're not going to get a Bitcoin type move. You're not going to get a Shake Shack or a Wingstop type move, or some of these companies that are small that can explode in value. All right. You're not going to get the Square and the PayPals, right? Square, Pay, all these companies I talk about every day, guys, still have growth potential. Why? Because if Visa is a $500 billion company and PayPal is a $300 billion company and Square is a $100 billion company, and Square is growing and it's growing faster than all two, the no-brainer trade or investment, the no-brainer investment is Square and PayPal. Why? Because Visa is the comp. So what I usually do to answer your question, Mrs. Henry, is I would take, if I made a whole bunch of money in Visa. A lot of you guys are doing this in crypto. Let's say you made a whole bunch of money in Visa, you made a whole bunch of money in Bitcoin, you made a whole bunch of money in Apple. And you think Apple's about to slow down in value, or Amazon. Well, what you do is you take some of your profits. So like, let's say I had a $10,000 investment in Amazon. Now it's worth $100,000. What I want to do is I want to find the next Amazon. So then I take a piece of it, 10% of it, 20% of it, and then I roll that into a company that's similar to that company that can grow. I did the same thing. When Amazon was my staple and it started to grow in value, I said to myself, what is similar to Amazon? Okay, what is similar to Amazon? What can grow in value? Well, I looked up the Amazon of every other country. I looked up the Amazon of Africa. I looked up the Amazon of Latin America. So the Amazon of Africa was Jumia. I looked up the Amazon of Latin America, which was Mercado Libre. I looked up the Amazon of Russia. I don't know the name of it. I looked up the Amazon of China, which was Alibaba, right? And I started to roll my profits from Amazon. I looked up the Amazon of Canada, which is Shopify. And I rolled that money into companies that were similar to it that can have the same explosive growth potential. You guys should be doing that right now from Tesla. I see a bunch of y'all running and taking your money out of Ford and putting it into Tesla. Now, that was the right move when Tesla was smaller than Ford. That's the wrong move when Tesla became 20 times bigger than Ford. Once Tesla became 20 times bigger than Ford, you should have did what I did. I started selling 75 to 80% of my Tesla. I went out and bought a Tesla. And then I took the other proceeds and I started rolling it into what I felt was the next Tesla. That was the Fords, the General Motors. Now, a lot of you guys are like, hold up, Joel, that's backwards. Ford's been around for 100 years. Didn't they invent the Model T? And I said, yes, but we're not talking about what company was out. We're talking about a company that has growth potential again. How did I know that it had growth potential? Not by looking at the share price. A lot of you guys are like, oh, Ford's $7 a share, Tesla's 700. So that's how I know that it had growth potential. No, that's a rookie move because Ford could have been bigger than Tesla, but I wouldn't have known that by looking at the share price. I looked at the market cap. When I looked up and I saw that Ford had a $30 billion market cap, and then I looked over and saw Tesla and it was 700 billion, I was like, 30 billion? 700, 30, 700. What's the odds? The odds of let's say Ford went from 30 billion to 700. That means you're gonna make what, 20 times your money? 20? The odds of if I was a betting man and I said either Ford's gonna grow 20 times its value or Tesla's going to grow 20 times its value, and you had a gun to my head, I would have said Ford all day long. Because in order for Tesla to grow 20 times its value, it's going to be, what, a $14 trillion company? Can it happen? Yeah, it probably could with governments printing money and all of that. But if Tesla grows to be 14 trillion, what the heck you think Ford's going to grow to? Ford has the F-150, which is the #1 selling vehicle on the planet. And it's going electric. It's going electric. My money is on Ford, not Tesla. I love Tesla. I own a Tesla. I own some stock. I made my money from Tesla. It's time to roll it into Tesla-like companies. Ford, General Motors. How do you guys figure out what those values are? You got to look at this market cap. Y'all are looking at the share price and trying to go off of what you see with your own eyes. Well, Ford looks like a nicer vehicle than Tesla, so I think I want to invest in it. That's how a lot of you master degree lawyer doctors be thinking. It looks better, so I'm going to buy it. What kind of sense does that make? All right. You want to make sure that its market cap can grow. And when I saw the market cap of Tesla go to 700, every car company on the planet thanked Tesla for it. Y'all be thinking that the companies are mad at Tesla. Tesla just said this is the new value for car companies. And if you make electric, you can get close to this value. Maybe even half, maybe even a quarter. That's why every single solitary company on the planet started to go electric. Y'all make trading hard. I don't. It's a no-brainer. Oh, Tesla's the comp. Tesla changed the world. Therefore, all the other car companies are going to change. And they are going to grow in value too, as long as they provide electric cars. Tesla's the blueprint until another company can surpass it. Y'all can be mad at Tesla all day long. It's so far ahead of every other company in market cap that it's like a millionaire arguing with a thousandaire. That's how Tesla's looking at Ford and General Motors. They're like, even if you had a superior car, it's like Facebook looking at Snapchat. Facebook is like, we're worth $1 trillion. We can buy any other company out there. When you don't have the buying power to be able to take me off of my throne, then that's how you view companies. Ford can do whatever it wants to. Ford can say, Ford is only worth 40 billion. Ford can say, we're going to put $20 billion into electric cars. That's half its worth. Tesla's like, we make or lose $20 billion every couple of months. That's nothing to us. 20 billion, they're laughing. They're laughing at Ford's $30 billion value. Tesla can come around and buy Ford. That's how much money they got. And you know where they got the money from? It wasn't selling cars. It was from investors like you and me that put money into the company and grew the market cap. And now its market cap is so big, it can buy whatever the heck it wants to. It has the same buying power as Google and Facebook and some of these other companies that are $1 trillion. And when you have buying power like that, you're too big to fail. All right. Ratata. All right, great questions. Hold up. Coming to grips with the fact that I don't know what the hell I'm doing. That's cool. I didn't know what the heck I was doing either. You got to learn at some point, and the only way you're going to learn is by being invested. All right. Do you have different brokers for each trading strategy, short-term, medium, and long-term? The answer is yes. I use Fidelity for my long-term investments, 401ks, IRAs. I use TD Ameritrade for my trading. It's called TD Ameritrade for a reason. My options, my futures, my swing trades. I do all of that on TD Ameritrade. I separate the accounts. All right. Somebody say Tesla is more than a car company, though. That's so funny because that's what people say to make them invest. Look, I tell people that all the time. I text my buddy the other day and I said, you know, Tesla is not a car company. It's just a computer on wheels. You know, that sounds so good to say that. They have a gigafactory. They have this. They have that. How did they get? Y'all know they didn't have all that until they became a $700 billion company. They had to talk the talk to get investors to invest in the company, and then they walk the walk and start putting that money to work. All right, Tesla has always been at the forefront. It's a computer company. The Tesla, if you ever driven a Tesla, there's a reason why I own one. It is a computer on wheels. There's no knobs. There's no little gadgets, no lift up or down. Everything is touch screen. I can do everything from my phone. I can enter the car. I can get out the car. My wife has the garage program where she can just drive up and the garage opens. Like, it's a computer on wheels. It's a very great car. But they're now starting to do more, and that's why investors are like, oh, okay, let's continue to invest in that particular company. But guess what? They are the blueprint. You're going to start seeing other companies do the same exact thing that they're doing. You're starting to hear Ford and General Motors talk about building their own batteries. They're starting to buy out all of these different places so that they can build. Tesla is trying to change the game where they're going to bring the cost of everything down by making one frame. That's why I don't think you guys understand a lot of the technology that's behind the Cybertruck. You guys only see the Cybertruck for what it is visually, but you guys don't understand what is involved in that particular vehicle. I'm a tech geek, right? So when it comes to techie type stuff and information, just the fact that it has hydraulics, it's going to be the fastest thing on the road. It only uses one frame. There's no gas involved in it. That means I don't have any maintenance whatsoever, right? All the electric vehicles I've ever had, I never had to service any of them. The only service was tires. That's it, right? Tesla claims that every single car is going to get 1 million miles per battery. Now, the only reason why they're not able to prove it is because the cars that they first started to build back in 2014 are finally getting to that $1 million mark, so they can say, see, I told you, every car can get $1 million miles per battery. So with time, you're going to start seeing, they claim that every vehicle is going to be, once you buy a Tesla, you can use it for the rest of your life, right? And then maybe in 40 years, you might change out the battery. But, Tesla is more than that, but every single car company is using Tesla as the blueprint. And if they can use it as the blueprint, just like any investor, once Tesla grows too big, let's say Tesla gets to 5 trillion. All right, 5 trillion divided by 700, 7, 14, 21, 38, 35, 42, can give you about 6 times your money. So, if you put 10,000 into Tesla right now, you might make $60,000 in the next 20 years. Tesla is so big, guys, growing 7 or 8 times its value. Those days, I believe, are over, right? I can't see it being, now anything can happen, but what realistically can grow 10 times its value? Tesla going from 700 billion to 7 trillion, which is 4 times bigger than Apple, or a company that's $30 billion that can grow 6 times its value, still only be worth $180 billion and not even be the 3rd largest car company on the planet. It's more realistic to see Ford grow 6 or 7 times its value than Tesla growing 7 times its value. So the way that you win is not to take all your money out of Tesla and put it into Ford. It's to take part of your money out of Tesla and put it into Ford. And if Ford does grow 7 or 10 times its value, you know what I'm saying? You still win. You might not make all the money, but you're going to make some money. And that's how you approach the market as an investor. Thoughts on staying long on coin or getting out soon? All right, so the question is about Coinbase. So Coinbase is the #1 cryptocurrency brokerage out. And Coinbase is what I use to store my coins, my Bitcoin, my Ethereum, and I store them in vaults so that my money won't get stolen. I hear the horror stories about people that are losing money, and the reason why they're losing money is because they have their money sitting in a wallet. It's just like if you walked into a party and you had your money in a wallet in your back pocket. You can walk into that party, but you can easily get it stolen if you get a pickpocketer in there. But if you stored your wallet before you left to go home, and let's say before you went into the party, you took that wallet, you put it into the glove compartment, then you locked the glove compartment, and then you went into the party, you have a higher chance of you not getting your money stolen. And that's what the vaults do over at Coinbase. Coinbase has vaults where if you buy something, and I always tell people, if it's more than an amount of money that will hurt you if it gets stolen, I used to say $10,000, but $1,000 is a lot to some people, then you store that $1,000 or $10,000 or $20,000 in their vaults that are offline, where it's almost impossible for anyone to steal those particular coins. So Coinbase has been, heavily regulated in the last year or two. Coinbase wants to be the leader and the #1 truster of crypto, because if we can get the federal government to trust something like Coinbase, where when you're buying something on Coinbase, they're giving you a track record, and they can funnel out any type of negative or illegal activities that's going on, the more likely institutions are going to start putting money into the crypto space. The more money that flows into the crypto space, the higher not only does your crypto go, but it makes the cryptocurrency environment more stable, and it makes it more lucrative. And what a lot of people don't know about the cryptocurrency market is that the cryptocurrency market, in order for it to work, we need outside money, because the cryptocurrency market is decentralized. It's not using funds that are backed by the government. It's the first currency that was created for us by us. So, like FUBU, right? It was created for every single country. Like, let's say I'm over in Africa or Japan and the financial system tanks. In the past, you had nowhere that you can put your money, right? You could try to put it into gold, but it was kind of hard to take your money and invest it in gold. Sometimes you had to do it through the stock market. What if the stock market, is closed down through the banking system or what have you? Well, the cryptocurrency market is a way to protect all governments, all people from their governments, so that if you have a universal currency where Bitcoin is the store of value, and your government decides to tank, or your government decides to print money, you can combat all of what's going on in that government by taking your money and then putting it into crypto. And now it's safe because it's protected by the whole world. And that's the one thing a lot of people just don't get yet, that we finally created a universal currency that every single person on this planet can use. And I can send money to and from people, and I don't have to worry about the government getting all in my business on me sending $10 million over to this person over in Africa or Japan. Okay? Yeah, there's some cons to that. There's going to be illegal activity no matter what you do. We live in a world where we sin, right? So I hate hearing those stories. It's corrupt. Everything is corrupt. America is corrupt, right? But, if you look at the bigger picture, which is the cryptocurrency market, and understand it, then that's why you need to be invested in it. All right. But my thoughts on it is that as long as the cryptocurrency market is increasing, Coinbase makes their money by transactions. You buy something, you buy Bitcoin, you sell Bitcoin. You buy Ethereum, you sell Ethereum. They're making money on every single transaction that you're making. So the more volatile the market is, the more money Coinbase makes. So when you see the cryptocurrency market going up in price like it is right now and people are buying and selling it, Coinbase is making a killing. So as long as crypto is going up, as long as we have an inflationary environment where the governments decide they want to print $3 trillion, you're going to see people convert their money over into crypto, which therefore is going to make a company like Coinbase go up in value. I've been telling you guys to accumulate that company because every single cryptocurrency brokerage we've seen that was investable have all made money. When the Binance coin was around, everybody was like investing the Binance coin and it blew up in value. The same thing is happening with Coinbase. Yeah, right now it's going up and down and up and down because that's just what assets do, guys. They go up and down and up and down and up and down. But at some point, when it goes up, it don't come back. And you want to try to accumulate before that happens. What do I think about gold? Well, gold used to be the store of value. But I'm going to tell you, there's some flaws with gold, right? Let's say the world comes to an end, right? And we all sitting on these gold bars. Well, I guess you could go somewhere and you can barter and you could take a sliver of your gold and you can sell it. But right now, if I was hungry, even if I had a $750,000 gold bar, I can't go to Kroger and be like, shave some of it off and say, all right, can I get some eggs and some milk with this? You can't do that with gold. It's a great store of value, but you can't, it's not useful. You can't do nothing with it. So what they're trying to do is they're trying to make Bitcoin be worth the same exact amount as gold. In order for that to happen, Bitcoin has to be worth $14 trillion. Where are they going to get $14 trillion from? From us. Once $14 trillion goes into Bitcoin and it has the store of value of gold, it'll probably sit at that value and fluctuate with gold again. But not until then. And Bitcoin is only, what, $1 trillion in size? That means it can grow 14 times its value. That means it can go from 50,000 a coin to about 750,000 a coin before it equals the value of gold. So what you've seen people do now is they're not getting all the way out of gold. People that have millions and billions of dollars are realizing that Bitcoin is becoming a store of value. So what they're doing is they're not taking all their eggs out of, they're not putting all their eggs in one basket. They're shedding some of their positions on gold. Let's say they got $1 million position on gold. And they're like, all right, out of this $1 million, let me take 100,000 of it and let me go and buy 2 Bitcoins. Because if Bitcoin grows another 10 times its value, that 100,000 that I just took from this gold is going to be worth the same amount of money as my gold over here. That's what they're thinking. They're thinking if I put 100,000 in it and it's worth $1 million, then I'm going to have, it's almost like I got 2 investments. But let's say Bitcoin goes to 0. If Bitcoin goes to 0, that's a good thing for gold because then gold will become a store of value again, and then you'll see gold go up in value. So if you were an investor and you had $1 million and you see an asset over here that everybody wants to grow in value, why not take a shot with 10% of what you have? See, y'all don't think like the rich. That's how the rich think. They think, I'm going to win no matter what. I don't have to hit a home run. But owning that might be a home run. So they don't put all the $1 million of gold. They just shed a little bit of it, invest in 2 cryptocurrencies, and now they got the best of both worlds. All right. One can grow, and gold and Bitcoin has been growing at such a high rate that the money that they're losing on gold with this $900,000, Bitcoin is balancing that out by itself with a 10% investment going up in value. So it's still balanced out and it's still growing over the years. That's called hedging yourself. So hedge funds are taking hedges with their gold with Bitcoin. And when the government decides everybody's going to be able to invest in crypto, that's when you're going to see Bitcoin really explode in price, because $14 trillion, guys, is not a lot of money. It's not a lot of money. There's $14 trillion just in gold. The government is about to print $5 trillion. $14 trillion is not a lot of money. And we're not just talking about America. We're talking about the whole world being a part of this. That's why I tell everybody you need to own some of it, even if it goes to zero, because it's a hedge. Like, why lose out on something? I put $5,000 into Bitcoin. Actually, I put $500 into crypto. That $500 grew to $5,000 when I bought Ripple back in the day. In 30 days, my $500 went to $5,000. Actually, it went to $7,000. All right, then it went down a little bit. Then I took that $5,000 and I started accumulating Bitcoin. Then I sat on it for 2 or 3 years. Then that Bitcoin went from 50 to 65. Now, do y'all think I really care? I started out with $500. It's now worth $50,000. And while you guys are running around talking about, I'm too afraid to lose money, $50,000, a lot of you guys could have done a lot of money with that, right? And I don't just do that. That's not just a crypto play. I've done that several times over a bunch of investments. It just so happens that crypto is the hot topic right now. It could have easily been cannabis stocks. It could have easily been ChargePoint. It could have easily been some other company. But if you're not invested in these different asset classes, you can't be lucky. You got to put yourself in position to get lucky. A lot of you guys aren't putting yourself in a position to make money because you're too afraid. And if you're afraid, there's nothing wrong with that. That's part of the game. You just got to work with an amount of money that you're comfortable with. Because every single solitary trader, investor I ever come in contact with in history have always said, if I had only known, I would have put more money in. Everybody has said that over the last decade. If I had only known, I would have put more money into it. And it's usually some asset that they were losing on big time in the beginning that just explode, because all it takes is a couple of months for something to just explode in value. And then the move is almost over. Solana exploded in value in like 3 or 4 months. So if you didn't get in then, your $500 could have been worth $5,000, or I think it would have been worth more than that. Somebody showed me some numbers. It would have been ridiculous. Same thing happened in Dogecoin. Same thing happened in all of these things. And I don't want to make this a cryptocurrency Ask the Trader. It's just that, you know, believe it or not, cryptocurrency, Bitcoin has been Bitcoin has become the greatest investment in history. The number one investment vehicle in history. In history, guys. And it didn't just go up this year. It went up out of the last, I think I put out a stat, guys. I think in the last, from 2008 till now, it only had, I think, 2 or 3 down years. Every other year, it outperformed the S&P, the NASDAQ, big time. It outperformed the NASDAQ, I think, 10 times its value in the last 10 years. So you missed, I wouldn't say you missed out on it. It's just that it's starting to become that thing that if you're not investing in it, that's on you. All right. So somebody asked, so what do you do when you have a company like DK, which is DraftKings, that you are up in, but see way more growth in the next 3 years? Well, you've answered that question. If I know something's going to grow in the next 3 years, and you know it has growth potential, don't make investing hard. Keep it. The problem is a lot of you guys want to take all of that money and put it into something else. Go make some more money and put it into something else and let that asset do what it's supposed to do. Guys, you got to let that asset do what it's supposed to do. The only way you're going to be able to do that is you got to open up several accounts. If I have an investing account right here and I got a trading account over here, my trading account is going to satisfy all of my emotional, what's the word I want to use? It's going to satisfy that urge I have to trade. See, a lot of you guys love the feeling of buying something and it going up and buying something and it goes, like you like the emotional roller coaster of it. Do that in your trading accounts. But what's happening is it's affecting your investment accounts. That's why they have to be separated. Separate because see, while I have an investment account that's growing in value, if you're used to trading options, think about this psychologically. If I'm trading options or futures and I see a 30% return in a day, and then that 30% goes away, and then the next day it might be up 50% and then down, and then it might be up 75%, and then it's up a 200% and 300%, and I'm seeing that every single solitary day, it's going to make you strong enough to hold an Apple that's down 10%. See what I'm saying? When Apple is down 10%, you guys come into the room and tell me how you sold it all. I sold all my Apple. I'm like, is it going to zero? Apple can be down 20% and you guys are jumping off of a cliff. If you're used to seeing 20 or 30 or 40% over here every single solitary day, it desensitizes you against something dropping 20%. When Bitcoin dropped from 65,000 to 40,000, it didn't affect me. Why? Because it was just a 50% drop. 50% drops happen in everything. I see 50% moves every single day. That's nothing to me. But you haven't gotten to that point where you can stomach a 20 or 30% drop because you have everything in one account. That's why you got to separate it so that you guys can train yourselves to be traders and investors. If I'm used to these big moves, these small moves that y'all see are nothing. Now when I see Apple down 20 or 30%, I go all in with another 100 grand. Why? Because I know Apple ain't falling more than 30%. Because I can pull up a chart and I can say to myself, before I put 100K in Apple, what did it do in the last 4 years? I look at all the drawdowns. We call that a drawdown when it goes from a high to a low. And if I look and I see Apple's biggest move to the downside was in 2000, and I'm just throwing out a number, was 2017, and it dropped 34%. Then that should tell you something. That means that if Apple's biggest drawdown was 34% and it's down 20%, you know what I'm saying? I don't have to feel like it's going to drop 90. See, if you guys had been looking at crypto, you would have noticed that this is a real stat, every single solitary year for 11 years, Bitcoin has dropped 60 to 70% from its highs to its lows. Every single solitary year. So when it dropped from 65 to 32, it shouldn't have surprised you. You should have said, oh, it happened last year, it happened the year before that, 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 it happened the year before that. But because you guys are not vetting your investment and you're investing like rookies, when it does it, you don't know what to do because you don't know what it's done. Because all you had to do was pull up a chart and see where the drawdowns are. Just that little bit of work. And then I hear the excuses all the time. I don't have time to do that. Well, then you don't have time to make money. I think everybody has time to make $5,000 go to $50,000. I made my cryptocurrency account grew $35,000 in the last 30 days. I think I think even the millionaires in the room would love to have a $30,000 month. All right. And it didn't take that much work to figure that out. Okay. And when it dropped, I thought it was going to drop. I thought that the magical number was going to be 18,000. You know why? Because I'm a statistician. And I went back and I said, Bitcoin dropped 60 to 70%. So I took 70%, I multiplied it times 65,000. That's 70,000 or 70% times 6 is going to be what? 42. So if you subtract $42,000 from 65, that's going to put you right around $18,000 or $19,000. That's why that was my number. I was expecting Bitcoin to drop to 19,000. It didn't. It dropped to 29. It got $10,000 away. And then Elon and a whole bunch of other people came on, and then they caused it to go right back up. But it was right around that sweet spot. Once it dropped 50%, y'all should have been loading the boat. But because you haven't seen its performance in the last 10 to 12 years, and you've been listening to thousandaires tell you you shouldn't invest in it because it's worthless. I'm like, how is it worthless? There's people buying houses with Bitcoin. There are people buying cars with Bitcoin. Tesla came out at one point and said, I'm going to allow you guys to buy Bitcoin buy cars with Bitcoin. You can pay your taxes. The IRS right now, the IRS guys, the IRS, the Internal Revenue Service, you can pay your taxes right now in crypto, and you still running around telling people that it's worthless? You should be ashamed of yourself, because by you making that statement, you're stopping other people from making money. You know, karma works both ways. Karma works both ways. If you give out false information and you stop people from getting money, it can negatively affect you. That's why I tell people to keep their mouths shut if they don't know what the hell they talking about. Shut up, because you're gonna affect yourself. Be knowledgeable of something before you open your mouth. Don't talk about investing if you ain't invested, and then you stop somebody else from making money. Don't talk about trading with somebody if you never traded anything. If you haven't bought any cryptocurrency, stop telling people to buy it. All right, you guys got to start doing it. All right, at my old age right now, I'm starting to learn some of the energy that's floating around on this world that can negatively affect you or positively affect you. So I try to change that in the room. All right. Do you think blockchain companies will grow as much as crypto? Most definitely. So for you guys that don't understand what cryptocurrency is, all right. Cryptocurrency, in order for you to move money from here to Japan, it has to move on what we call the blockchain. So the blockchain allows that to happen. So the blockchain is run from computer to computer. I don't think you guys know this, but if I wanted to send money from here to somebody in Antarctica, it bypasses the banks, and that money floats from computer to computer. And there are people, and it's called mining. If you ever hear about mining, there's not people mining Bitcoin in the ground. Mining is a way to validate that crypto moving from this account to that other account, and you get paid by allowing us to use your computer to be able to bounce, the money from one blockchain to the other. So it's allowed to travel on that blockchain, and on that blockchain, different computers come into play, and you got more than one computer that validates that transaction to make sure that it's real. See, in the real world, people can print money, and you don't know if that money is worth $1 or $10 because all they did was print it. You can't do that in crypto, and that's what's beautiful about crypto, that you can't manipulate. Well, at least from what we understand, you can't manipulate the money. So if I send money, it has to get validated by more than 1 or 2 or 3 or 4 or even 5 computers. And once 5 computers validate that transaction, they charge you a fee. The people that use their computers, they get paid, and then they allow that cryptocurrency to travel. Now, the blockchain is also changing the world. So we got crypto that runs on the blockchain. In order for me to be able to fly in the air, I got to fly. In order for planes to fly, they need the airspace. In order for crypto to go from one entity to another, it has to travel on the blockchain. Well, the blockchain is the thing that's used to validate transactions. So what companies are starting to do now is they're like, hold up, this blockchain is is probably the best as far as regulating and managing things and making sure that things are supposed to be where it's supposed to be. It's one of the best things, if not the best thing ever created. So every single company is trying to figure out how they can implement the blockchain into what they're doing. So imagine if you're sending information, just the internet in general. They call the blockchain Internet 2.0. Why? Because the internet information travels. But what if I can have information that travels and it can always be validated and it can always be, it always leaves a trail? Well, that's what the blockchain does. All right, it's Internet 2.0. And there's so many other companies that's developing platforms where they're able to use this validation of the blockchain system. So the question is, do I feel like the blockchain is going to outgrow the crypto? I tell people invest in both. If you invest half your money in the blockchain and the crypto, if one of them explodes in value and the other one fails, you still win. I always buy the comp and I always buy its competitor. I see people do it all the time. Joel, should I buy Square or should I buy Visa? And I say buy both. And you're like, what? I'm like, buy both. But then I'm gonna not make as much money. I want to stop thinking like that. Stop trying to make the maximum amount of money because you don't even know what that maximum is gonna be. And most of the time, the amount of money that you make is so much more than you thought it was going to be. You might as well have just invested in the first place. Some of you guys think that it's gonna make a 10x. It ends up making 100x. You don't know how much it can grow, but you know that it can grow. So if you're interested in stuff like that, like people tell me all the time, Joel, I don't know if I should buy Uber or Lyft. I say, buy both of them. Huh? Joel, I don't know if I should buy Tesla or Ford. Buy both of them. Huh? Yeah. So I should buy one share of Tesla, but then I got $700 over here. I could buy more shares of Ford. I want to buy as many shares of Tesla that I got of Ford. That's not how it works, right? You just want to have the same amount of money. If I had 100 shares of Ford and one share of Tesla and they both grow 20%, I'm still going to be up 20%. Stop getting caught up in how many shares you can buy. Get caught up in how much that actual thing can grow. All right, so someone said the Fed manipulate it all. They do. The Fed manipulates everything. The market is rigged to go up. That's why investing is easy. The rich know this. The poor don't. The rich have all their money invested in America. You can hate America all you want to. You can. But if you're not invested in America, you don't make money in America. Okay? And by being invested in America, you got to be invested in some of the greatest companies on the planet. And they don't even have to be the greatest to you. I hear people argue all the time. Well, this company is better than that company and it's made in China. Is it going to make me more money? It don't matter. Snapchat is way better than Facebook. Facebook is bigger. Facebook can be mediocre. Apple phones are not as great as Google. Yeah, but Apple's the #1 company on the planet and has made you more money in the last 5 years than Google. It could have a superior product. That don't matter. The best product does not make the most money. It doesn't. And you guys got to start understanding that. When investors decide that they're going to put their money into something, it doesn't have to be the perfect product. It just has to be the product. All right, you guys got to understand that. All right, I think I answered all the questions. Let me go through again. Happy Friday, by the way, for anyone that's here. HU in the house. What's the stock? What's the stock that's up 300%? Oh, Solana. Solana is up 300%. It's a cryptocurrency. So, if you guys are struggling, if trading is definitely hard for you or investing is hard for you, take $65 and go sign up for my webinar. Now, do you have to be there for the webinar? No, you don't have to be there. It's going to be recorded. All right, so that you can watch it later. And no, I don't want you guys to buy it and then go show it to 300 people. All right, especially if you know they got $65. Now, if they don't have $65, then yeah, show it to them. You know, I want them to get that knowledge. But don't show it to your $1 million friend just because you're trying to give them something so you can get something in return in the future. You're taking money out of my kid's mouth. All right, but I want you guys to sign up for the webinar. if you can't make it those 3 days, you don't have to be there for those 3 days. Let's say you're only interested in day trading, then attend day 3. Let's say you're a newbie, you don't know nothing about the market. Well, you need to be there on day 1. Let's say you're only interested in options, then you can come in on day 2. Let's say you miss all 3 because you got a 9 to 5. That's great. It's going to be recorded. You can watch it at any time that you want. All right, after we do the session, the videos are going to be available the next day. You're going to have access to those videos for 30 days. All right, so I got to do charts with Joel, guys. I got to do charts with Joel so that I can have time to rest because I'm going to the D Nice concert tonight, and I need to be rested so that I can have fun when I go to it. All right, so I'm coming to you guys from Decatur where it's greater. Share this video with your friends. Give me about 13 minutes, and then I'll set up for charts with Joel. It's going to be a fast one, though. It's only going to be an hour. But what I want you guys to do, if you want me to analyze one of your, stocks, make sure that it's $1 billion in size, and I want you to add it to the picture that I have where I'm like this, and it says Mission Impossible. I want you to add your stock on that post, and then I'll take that list in the next 13 minutes. Add it to the list that I have, and I'll try to analyze those stocks in the next hour. Oh, it's going to be a special segment too because I'm going to teach you guys the MACD and the RSI, which is the moving average convergence divergence and the relative strength index. So I'm coming to you guys from Decatur where it's greater. I'm out of here. Peace. Share, share, share. Later, later, later.